Very good evening to all of you. Yes, good evening, good evening. So, today we have some interesting aspects lined up. Okay, so there is something that one has to understand in the topics that we are going to discuss today because sheer by hearting will not help in these topics. So, we have to kind of focus on what is to be done, not just by trying to memorize certain things, but there is a logic here in what we do, so which I would definitely like to discuss with you in greater detail, which is also one of the reasons why this is the session is okay. Yeah, 1 second, it will be audible, it will be now. I don't know why this is happening daily in the beginning. Wait, 1 second. Just have patience for a second. You will be able to listen. Ah, that's what I'm saying. No, I don't know why that's happening daily, but should not happen. Again, like I said, don't know. Maybe it wants to test how alert you are and how alert I am. So maybe it's doing that. Chalo, anyways, that is the story behind what we are supposed to deal with and do. This becomes a very interesting discussion. So, what are those topics that are going to be covered today, or in the sense, what we are actually going to look for is trying to understand how do you go about auditing various items, audit of items in financial statement. Now, okay, so when we say audit of items in financial statements, I would quickly like to recollect the story that you discussed in substantive procedures. Okay, so we discuss quickly once again what is substantive procedures. Now, the substantive procedures a break. There is a breakup of two branches. Yeah, test of details and analytical review procedures. Analytical review procedures are discussed in standard number 520. So a whole lot of discussion about that will be taken care separately. But test of details are broken down into two parts. What is that? Test of transactions, test of account balances. Test of transactions are called as vouching. Okay, test of transactions is called as vouching, while test of account balances is called as verification. Okay, now this is just quickly to help you recollect whatever you discussed in the past. It's got nothing to do with you know what is this particular chapter dealing with. This is just a recollecting aspect of substantive procedures, so that you should have an idea of what it is and on what we are supposed to deal with. Now, the other part of analytical review procedures, which is also very important in the context, we are not going to bring that story here. But when we talk about Vouching and verification. These two aspects are pretty important. Now, whether it is vouching or verification, these are procedures which follow a sequence of steps. Okay. Before we proceed further, I would also want to recollect a very important definition which is very helpful for us, and that is called as assertions. None of you will have a doubt because very recently only we discussed the definition of assertion. So I hope everybody will know it. But because this session, a lot of use of these assertions are going to be discussed, which is why I want to recollect the definition once. What are assertions? Assertions are, now for those of you who haven't attended the previous sessions, who don't know assertions, this could be a learning for you also. So just stay focused. What are assertions? These are assertions are representations. Assertions are representations made by the management which are embodied in the financial statements. Assertions are representation made by the management embodied, that means put into, embodied in the financial statements. So can we break this down in colloquial terms so that we don't have to be extra worried about this definition every time we see this word assertion? Should there be a confusion in my mind as to what it is and all that? You don't have to. We can easily break it down. Like now, there are so many things that our management is going to put up into the financial statements. What all will be there? For which, again, I would like to recollect the definition of financial statements itself. Arey sir, who will not remember financial statement? But still, I want to tell you, for once, we have balance sheet, we have P&L, of course, the cash flow statement, but that is only a statement, so nothing much of that, and then the notes on accounts. Now, I know this is not some very basic class to teach you what financial statements are, and I believe you all know them very well. Now, apart from all that, balance sheet reflects account balances. P&L reflects all the transactions that took place, and notes to accounts reflects all the disclosures. Correct? This is the background. Okay. Now many people will be like, sir, we are talking about chapter 9 of the new syllabus and chapter 4 and 5 or 5 and 6 of the old syllabus. We wanted you to discuss vouching and verification. Why are you wasting time discussing all these? That is exactly what people do without understanding the fundamental. If you really want to know what exactly should be done to handle vouching verification easily, you need whatever you are seeing on screen as the clear background. Okay, because these aspects of vouching or verification, or even for that matter for disclosures, what you are going to do is totally dependent on the three concepts that you see on screen. So now we will take one at a time. We will not overtax ourselves or overburden ourselves with all three. So what we'll do is we'll take help of standard number 330. In standard number 330, which is talking about further audit procedures, and one of the further audit procedures being the substantive procedures. So what I will do now, I hope everybody is clear the definition of assertions. Please throw a yes in the comments if you so. I mean, whatever we have discussed till now, if you got the background right, I think that sets the tone for our session in a greater detail. So you might just want to throw a yes there so that I am also satisfied and convinced that you guys are on the right track, and then we'll start going with a deeper discussion. Okay. So financial statement is clear. Substantive procedures definition is clear. The breakup of them into two is clear. And the contents and the word assertions are pretty clear. Okay. Now, as when we go by the items in financial statement, let's break this down into three parts. Some of the items in financial statements are reflected in balance sheet. Some of them are reflected in the balance sheet, while some of them are reflected in P&L, while the others are reflected in notes. Now, how helpful it is to understand which assertion will impact. Okay, very good. Right, I get to see your comments right now. Okay, that's an amazing response. Fantastic. Now I get to see three aspects. Which element will be affected by what? Now, this is not an open statement that you can figure out or finish off just by taking one topic at a time. So you need to understand for each item what sort of a treatment should be given. Now, which is exactly where our assertions make a clear discussion. Okay, for now, let me start with items that are there in the P&L. What are those that are reflecting the P&L? They are only called as transactions. Whatever transactions took place this year, which are in the likes of sales, purchases, okay, and that whole lot of expenses, stationery, travel, advertisement, rent, salaries, wages, whatever you see this side, plus rental incomes, other incomes, and whatsoever be the incomes. So all of those, they all account to what is called as transactions. Now here what you also have to note down is some interesting transactions in the likes of insurance claims, sale of asset, sale of investments, they are also happening, okay, which will have an impact in both places, that in the P&L and the balance sheet. So some critical transactions are there which are called unusual transaction. What do you experience an insurance claim daily or what? So they are called unusual transactions. They happen once in a while, and for such transactions there are some special aspects that you have to capture. Now, starting with P&L items, let's talk about what are the basic assertions. Now, you know what assertions are. Representations made by management. Auditor dealing with these assertions is a different story. I'm still talking about financial statements, and I hope all of you listening this clearly know that financial statements are a responsibility of management. So let's stick to that definition, and where financial statements are the definition, or the responsibility of management, they will tell you that something happened. What is that something? Transaction. Okay, what happened in the transaction? What happened in the transaction? Sir, it occurred, sir. Very good. So, by putting some item in the P&L, what is the management trying to tell you? Let's say they put a heading called salaries. By putting salaries, guys, this topic is very basic, but I don't know why many people choose to ignore the understanding of it only. So, if you blindly want to read, no, this topic will be of no use to you. Tomorrow, when you go out to audit as a first year article student, this is what you will be doing: vouching and verification. They won't give you tasks which are sign the financial statements kind of task. They won't give you. So what you are going to do is start off with these only. So whether you like it or not, and from exams perspective, I understand it's too much of content, which is why both syllabus people are worried that what should I do with this topic. You don't actually have to go and read there. There's a particular pattern and a way that we have to answer. So stay put. Right, from now till the next 10 minutes your problem will be solved. Concentrate. So in transactions which have occurred during the year, I don't know, I am not even part of that. I am the auditor. I'll come slowly later, after the year is over, after management have prepared financial statements and taken responsibility. You know the story. Management has to take the responsibility that it is their duty to prepare financial statements, and they have prepared the financial statements in accordance with the fair presentation framework, along with all the accounting standards have been followed. You know their responsibility. After they do all that, slowly I will go to do the post-mortem exercise of conducting the audit and expressing an opinion. Now, I can't alter these transactions. What can I do is only conduct an audit. From where will I conduct an audit? I will conduct an audit by seeing those transactions that are presented there. Now, if just understand this one, this is the P&L account for a minute. I don't want to put everything there. I'm just putting one favorite item of mine called salaries. Okay. Why? Because it's easy to explain. Salaries, just simple one, random figure, 5 lakhs. If you pick up a P&L account and see salaries are worth 5 lakhs in that, okay, what is the management trying to tell you or the whole world by putting this here? Because you are not the only reader of financial statement. No, hell, a lot of people are there. Bankers will read, our own shareholders are going to read, our own employees are going to see this P&L. So this set of financial statements are going to be used by so many people, but they will all have trust only when you audit. So you have to understand this very clearly. So if management is putting salaries here, what are they speaking by putting this here? What are they telling the whole world? What are they talking? They are telling some simple things. These are represented by management. This is what is called assertion. A representation made by management embodied somewhere in the financial statement. Sir, 5 lakhs we paid salaries. A transaction between me and the employees occurred. So are they telling that there was an occurrence of a transaction? Yes. Are they talking about the quantum? Yes. Last year salaries paid in the current year, are they talking about that? No. So they're talking about occurrence. They're talking about its validity. They're talking about its time. They're talking about its genuinity. Like this. Sir, how are you able to see so many things in that one line? That is the beauty of assertions. The very fact that salary is featured there, management is telling so many things by just putting that item here. Management is asserting. Now, only one item I will explain all this. Okay. Later you can sit and do the entire. What all we are telling? Now let's go and summarize it up. Sir, a transaction occurred. That is the first thing that we are talking about, right? A transaction occurred. So the first and foremost thing is called as occurrence. Not occurred, you're giving a number 5 lakhs. Does it mean it should be accurate? When if numbers are not involved, then it's okay. But when numbers are involved, we definitely have to talk about whether the numbers are accurate or not. So accuracy. If salaries have been on the debit side, to the extent outflow should be there or not. So from the accounting perspective, is the transaction complete? Only when the transaction is complete, they will show your salaries on the debit side. Means yes, a transaction between me and the employee is complete and I have paid. If it is due but not paid, then you will show as outstanding. No, not here. See, in that one line, how much speech is there? Are you understanding? Now, when I say electricity, 2 lakhs, that means, yes, we've used power. A transaction between me and the electricity department occurred. An accurate bill of 2 lakhs. Now, what will you check? They say 2 lakhs here. Worth supporting 2 lakh bills are there or not? Should you check or not? Accuracy. Completeness of the transaction. Okay. And then we talk about one very important thing. Whether this pertains to this year only or not. And these sort of transactions, they become very important when it comes to areas like purchases, sales, inventory. Goods received in this year. Payment was made next year. Goods sold this year. Delivery was made this year. Goods have been dispatched from our godown on a particular date like 29th March. But it reached on 2nd April. So some complications are there always to the year end. So therefore there is one technical topic which is called as cutoff, which just means that transactions pertaining to a particular year have to be segregated. You can't mix up various transactions of this year and that year and try to complicate that story. You have to keep it simple. How to keep it simple? By explaining what is called a cutoff. This year transaction will be recorded this year, next year transaction will be recorded next year, which is very simple because we follow the concept of accrual. If a transaction has taken place now, the outflows of which are in the other year, then occurrence becomes an important thing to follow it up with cutoff. Okay. So we are not just simply throwing up things here. We are making sure that certain aspects are definitely covered while expressing. Auditor didn't even come to the story. Hold on. So yeah, what am I missing? Occurrence, accuracy, completeness, cutoff, And most importantly, in all these transactions, because it's a P&L item, did you correctly classify it? Because here there is a mistake that can very commonly happen, which is called capital expenditure being treated as revenue and vice versa. Revenue expenditure, it got capitalized. Nonsense. Capital expenditure, entire thing charged off to P&L will suddenly decrease your profit by so much. It has to be capitalized, and over the years you have to depreciate it. Do you charge the whole thing to P&L? Will that create a problem or not? Which is why classification becomes a very important aspect. Now, who will concentrate on all these 5 aspects? Not auditor. Auditor will come later into the story. These 5 aspects are to be taken care by management. Now, many people think that as auditor we are bothered about these 5 assertions. No, assertions are the responsibility of management. I am not telling, definition is telling. These are representation made by management. Then sir, what are we supposed to do? That's where audit of items comes into picture. So you are trying to address these 5 assertions. That's why your answer will not have 5 points, but it will have more points. Because to address each one of this assertion, we have many things to cover. That also we will discuss. But before that, let's quickly hop on to the other point right now, wherein it's about balance sheet. This time we will not talk about occurrence of asset. Asset purchase is a transaction that already occurred, but is that asset still there with you? Now physically you have to check whether the asset is with you. It's called what? Existence. This time you will see different things: existence, valuation, possession, rights and obligations. Then different accounting standards talk about the proper disclosure meant for certain assets. So this time we're talking certain broader aspects. Existence, is that a right for you or is it an obligation? Right will be an asset, obligation will be a liability. Under what classification does it fall? Existence, rights and obligations. Okay, then because it's an asset, no, we also talk about valuation. Assets valuation is very important. We have to check whether the asset really exists. You can check it through physical verification. So okay, let's not talk about auditor story, we will hold it. We'll talk about management story. Now this time let's say the same thing like is balance sheet. So if you are putting something on the asset side, what is that you are speaking out through that line? Saying that asset exists, it is our right, and we valued it. So let's just convert why we'll put another one quickly. A balance sheet which says fixed assets 2 crores. By putting this line, what are you trying to tell? That I have fixed assets. That means the fixed assets exist with me, whose valuation is 2 crores, and since you put it on the asset side, it will be called as a right. Then disclosure, no doubt, disclosure becomes a very very important aspect, and here also completeness to be checked. So existence, ownership, okay, you can check that also. That is another assertion that you can, only when you own the asset you will show it now here. Existence, ownership, valuation, rights and obligations, and completeness of the transaction, whether the entire transaction is complete. Both debit and credit aspect of this are checked. Okay, whose duty is to put all these? Again, management. What will you do now? Let's start with the first one. Tell me, I want to see in the comments as to the first one. To prove existence, by putting this here, management is telling fixed asset worth 2 crores are there. Their job ends. Now tell me from the perspective of auditor, what are the ways to confirm existence? What are the ways to confirm existence? I hope you are able to, understand the point that I am going to bring in. Don't try to read and by heart all those points are set one framework in your mind. That will only complicate the story. If you want things to be easy, understand this logic, then you won't find any difficulty here. Come on. Okay, Suresh, very good. He's saying we'll check title documents and physical verification. Very good. But some of you are only saying physical verification, only title deed. Okay. Anyway, the point I wanted to make here was, is there more than one method to confirm existence? I agree, physical verification definitely is the great method. What better than seeing it with your eyes? But I told you, documentary evidences are more reliable than visual and oral evidences. Do you get this? Guys, 200% all of you giving the answer as physical verification is absolutely right. I am not denying that. But should we even check the title deeds? Yeah, for some of the assets where you can't do physical verification, then what will you do? Some assets are there under the ground, right? Go to a cement factory, do an audit, then you will understand. Go to a petroleum or petrochemical processing plant. There are so many assets that are not visible, fixed asset, heavily costly. Go to an IT company. So many switches, servers, right? Rack mounted servers. You can't climb on every rack and see. They won't even allow you inside there. It's a very complicated stuff. So, title deeds. In fact, management representations sometimes. Do you remember taking written representation? So, just anyway, the point I'm trying to make is just to confirm an item like existence, you have so many aspects to cover. Then to prove whether it is your right or an obligation, you have to see the origination of the transaction. Now, you paid money and bought it, which means it's your asset. That means I have a right on it. Same way with debtors. I sold him goods. There is a proof in the transactions. There is a proof that I sold him goods. Now, because I sold him goods and he owes me, it becomes a right for me to collect money from him. Okay. Then talk about valuation. Some valuations can be confirmed right from invoices. For some valuations, you need expert certifications. Value of a building. How will you do value of a building? You know. So sometimes an expert is indulged. You can use their report. Ownership can again be ownership and existence are two different things. Existence mostly you have to check by physical verification because you got to prove it. One more thing you can do, check the charge documents filed with ROC. If it's a company and all, any charge is there, you can do all this. So all I'm trying to say is, as an auditor, you try to address these 5 assertions. Management will try to make these 5 assertions. Auditor should try to address these assertions. Then you will get not 5 but 8 to 10 points easily under each aspect. I will tell you. Okay. Now, the last part before we move on and close this topic is just to see what are the assertions that we can budget up for our disclosures. Disclosures is nothing but a combination of, I'll say A, B. You got to check both, all of these points. So which means occurrence, accuracy, completeness, rights and obligations exist. Everything will come here. Sir, how do you say that? Because some notes, some disclosures contain numbers. Some disclosures contain facts. Some disclosures contain simply a mention of a compliance. Whatever be it. All I'm saying is, this is what you need to comply. Now, if you get this right, now I'll give you the ultimate technique for what we need to do in these type of questions. Okay. First, let's talk about items under transactions so that we talk about vouching. But before that, did you understand the logic of how I discussed this chapter? Now are you understanding what we are supposed to do? So rather than by hearting, whenever they give you any item, even if you don't know anything about it, you can still get a framework in. I'm pretty sure instead of 0, you will at least get 1 out of 3. If you write some points which are definitely right, you will get at least 2 out of 3. And if you know what to write properly, you end up getting 3 out of 3. Or 4 out of, depending on how many ever marks they ask for. Okay. But definitely not 0. Because you at least know the framework. Tell me, if I write about these assertions and how they are addressed, how will I go wrong? What else is the auditor expected to check? So please don't write some random points and lose your marks. Try to address the situation on hand. Okay. Are you guys clear till here? Does it make sense now? Now, most times what happens is people either don't tell you all this logics or straight away we will go into the topic. We'll start with the first item in fixed assets. Okay, let's start with tangible fixed assets. We'll go off there. That's where the problem sparks in. There is a reason why all this is given, and until and unless you understand all this, you won't be able to comprehend this topic. Now, not me, you can only tell me. For each assertion as an auditor, if you find 2 or 3 ways to grab confidence about whether that really happened or not, automatically your answer will look absolutely correct. At least nothing wrong. Okay, because what you wrote, no, nobody can tell you that it is wrong. Let's now go ahead and see the most important part of this entire segment is how to conduct vouching. How to conduct vouching. And also another point on how to conduct verification. How to conduct vouching and verification. What points are there that you should never miss, and that will be a very critical aspect. Okay, so now I will take you through to start off with what is called as vouching. Now what is vouching? It's an act of examining the vouchers. Act of examining the vouchers, wherein you have multiple aspects to check that, date, place, when it took place, what was it, how was it done. There are a lot of points that we have to cover while doing vouching. Now whenever we are talking about vouching, one thing has to be again kept in mind, that it is not just about cross checking with a document, because we all know that fake documents can be created. Okay, it's not very difficult to create a fake document. So if you still think that by checking documents vouching is conducted, and simply if there is a supporting that will be done, no, that is absolutely wrong, because a simple supporting will not justify. It has to work with a proper logic. Understood? So how will it work with that logic? What should you do? All those are points that we have to communicate through our act of vouching. Let's start with a few interesting and important points, because they are always important. You cannot just run away from those points. What are those? See, there are two things: whether there is a management permission for this to do, and for all these sort of transactions, internal control is a very important aspect. So whenever you are vouching, first and foremost point, or first point that you have to check to match the success, whether there is an authorization, whether there is a authorization to do that transaction. Is it really the right transaction that you have taken care of? There's something that we have to definitely understand, otherwise it's not going to work. Authorization. Then every transaction is surrounded by what is called as internal control. Every transaction has to be surrounded by internal control. Don't forget these two. First, whenever you start the topic of doing a vouching, yeah, we will check supporting documents, we'll check so many things, we'll check, nothing wrong. But first and foremost thing are these two: whether the transaction has been properly authorized, whether the transaction has been properly authorized, and whether internal controls are present in the area of occurrence of this transaction. If you are able to get these 2 points right, very good. Now I see in comments somebody saying documentary evidence. Ram, very good. We will get to that. Documentary evidence, in my opinion, is 5th or 6th point. But before that, did this transaction really happen? It will start with authorization. Then it's followed up by an internal control. If internal control is not there, my risk levels go up or not. So which is exactly why I want all of you to be bothered about the internal control aspect. Now, after that, we will see the nature of this transaction, because we will get to know what accounts are involved when you see nature of transaction. Nature of transaction. Is it a capital account transaction? Is it a one capital account is affected, one revenue account is affected? What is being done here? Which are the accounts that are being affected? Is this a transaction which is short term in nature, or is it a recurring transaction? All that will give you a fair idea of what the transaction is and how should you proceed further with the audit. Then 4th point, you bother about the accounts affected. Why should you be bothered about accounts affected? Because generally there are two or more. There is no rule that every time only two accounts are to be bothered, right? Two or more accounts may be bothered. So what are those two accounts affected? Generally, ones will be cash or bank. With no doubt, something will be cash or bank. So trace the relevant entry in the cash book or the passbook, which is a mandatory aspect. First, you see which accounts are affected, and because these are transactions, money flow will be there. So one point that you can definitely write is tracing the relevant entry. Tracing the relevant entry in cash book. Tracing the relevant entry in cash book or bank statement. Now when you trace the relevant entry in cash book or bank statement, two things are being proved. Yes, the transaction is complete on both ends. It is accurate because amount is debited, and not only that, there is a thorough proof that that amount is there in the bank statement also, and it is accurate. So many assertions are confirmed with these two simple checks. You check which are the accounts affected. Two things. Traveling expenses account is affected. Now I think I should appreciate that point what Ram said. We will check the documents. Yes, no doubt. We'll go check the tickets. In fact, I will tell you something more about how to check the authenticity. Not just checking tickets are there. All of us know here in today's world of Photoshop how tickets can be created. How about the authenticity? Okay, anything can be created in Photoshop. Even authentic documents can be created there. But auditor is not a bloodhound. We know that. So what I see, I will believe accordingly if it's genuine or not. What do you expect me to do? Go to the airline and show them and confirm? Really, if that person flew from there to there? See, I have a ticket. Along with that, I saw even the boarding pass. So I think that's more than a confirmation. No, sir, some people have this intelligent habit of booking the ticket and then cancelling it. Cancelled portion they will not submit. Only the booked portion they will submit. And there is no proof of travel. Which is exactly why we will also check the proof of travel by checking the boarding pass. And it depends, on some occasions some employees don't submit all this. They'll be like, I threw it in the airport only. What will you do? Will you not give me my reimbursement? They'll start shouting at the internal auditor or somebody. But anyway, as a statutory auditor, our point is very clear. I am not bothered about your boarding pass. I am bothered about a control there. There is a clear lapse of internal control wherein we asked you to produce a mandatory document and you didn't produce. So that is why right after tracing these two, check supporting documents. Now is the important aspect. Check supporting documents. Sir, are we done by doing all this? Definitely not. So I will soon take you through verification in the next slot. We will just continue these points here. So I'm moving on to the seventh one. I hope everybody is catching up with the broader story. Yeah, very good. We still have aspects of disclosures, reasonableness for such transaction. Yes, very good, very good. So I can see those points. Now that these 6 points are taken care, one of the most important point that you should be bothered about is whether this transaction occurred and is relevant to our business. Because you can charge it to P&L only if it is relevant to business, no? Now director went on a personal travel. He went somewhere nicely, enjoyed with his family abroad, spent all that money from company account and he came back. Right? So a few more points to follow. Yes, very good, very good. You can see some of you are answering the right points. So I think that should make a great deal of sense here. Let's go ahead with now that you have done all these. Okay. Yeah. So point number 7. What did I miss? Okay. Right. Let's go with point number 7. Obtain external confirmations. External confirmation. Now this is wherever possible. Okay. If you are unable to obtain an external confirmation, I won't force you to get one. But yes, many transactions can be confirmed via an external confirmation, and there is no problem if you are able to get that in compliance with standard number 505. I hope you can safely get a external confirmation. Then, since these are transactions which involve numbers, I am taking your attention back to this story that I told you, wherein you see vouching as one substantive procedure. It always can be connected to performing analytical review procedures. Performing what? Analytical review procedures. So, obviously, no doubt you can add a point here. Perform analytical review procedures in compliance with standard number 520. Now you are quoting standard numbers just to convince or tell the examiner that look, what you are doing makes sense, you also know stuff. That's what we are trying to do here. Otherwise everybody will write all these general statements. You want to take it further, then you have to keep it with that conviction. Then now comes another important point: compliance. Compliance with what? Compliance with laws and regulations. Compliance with laws and regulations. Again, in compliance with standard number 250. See, all places apart, these first six are basic. Then now whatever I am going to tell you are based on the audit procedures. Okay. Now then you can add up one more point here, that is occurrence of the transaction is the occurrence in the interest of business. Like I just told you, they bought some goods. Did they buy it for business or anybody's personal use? Director went on a travel. Did he go on his personal visit or is he in line with business? So occurrence, is it in the interest of business? Whether the occurrence of this happened in the interest of business. Okay, I think these 10 points would cover almost all your points in the answer. Now, try to make these points. Now, where external confirmation is not there, don't fit in that point. And don't think that these are 10 general points that you can write in every answer. Okay, so you should see which item. If you are able to recollect this framework, that is enough, because spending time on reading each area is of no use. Authorization, internal control are same. Where you need to apply your mind is, you anyway are studying accounts, right? So there you will anyway get to know what is the nature of the transaction and which are the accounts involved. Keeping that in mind, I think a great deal of problem is solved there itself. And based on what this transaction is, you can also figure out what the supporting documents are. Okay, so which is exactly how you will figure out these aspects. And if you want to add one more, let me give you one point which is more relevant for assets and liabilities actually, but sometimes depending on that you can as well see whether there is a proper disclosure, of all aspects of transaction. Okay, all aspects of transactions, and you can say this is in line with accounting standards. Here you checked all auditing standard compliances, right? Accounting standard. And I think I can give you point number 12, which will again not be applicable in all cases. It's a special case. Point number 12, obtaining written representations. Obtaining written representation as per SA 580, which is in support of other audit evidences. So on its own, does it make a lot of sense? The answer is no. Okay. Yeah, whether the voucher falls within the accounting period, I think we are just seeing that in the part of cutoff, the nature of transaction, timing, tracing the relevant entry in the books. So by doing all this, okay, by doing almost all these 12 points, I think you are able to cover almost everything. I hope all of you guys agree with this. And if you guys have anything more to add, I don't think you will find anything. But anyway, because we have done a comprehensive, study, I won't blame you. But just if you can add up something, would you guys take a minute to throw that? point there in the comments. Let's see if I did miss something, and if something is valid, we'll definitely get that here. Anything? I think we have covered everything. It's a wide thing. Oh yeah, previous year accounting records. Okay, that comes under the supporting documents. One more thing, guys. When I said supporting documents, it's a broad word. Anything that supports the occurrence of the transaction or anything that supports the valuation, you can take everything. So, if the document is something which is having continuing relevance, do you guys remember studying about continuing relevance? Like a rent agreement. Rental expenses you will see in P&L. Every year they will not give you new rent agreement, no? One rent agreement will be there every 11 months they are renewing, and there some clauses are there which says this much will be the escalation after this. So when they are entering that, you can see that. And nowadays they'll give you all scanned and digitized documents. So it's always better to see original documents as per the rules of reliability. So when I say supporting documents, a whole lot of thing will be covered in that. Okay. So yeah, I don't see any more points coming in. If you guys are reminded of something, do throw up. And at the same time, I would like to know from you whether we can wrap up the vouching part. That is for all those items that occur in the what space? One sort of financial statements are in the P&L space. Fight and opening balances are mostly with balances brought down, no ma. When balances are being brought down, that will be more about what do you say in verification part, right? Present as per Schedule 3 of Companies Act is covered in point number 9. Compliance with law and regulation. Correct? Yeah, Shivani, that is something which you have to comply with law, right? It's section 129's requirement that you present as per Schedule 3. So when I say laws and regulations, it does cover every law or regulation. Shivani, I hope you got that point. Yeah, what's Nandini saying? You made it very easy. Very good. Nandini, not just for you, all the 100, 110 people who are watching here, plus the thousands of ones who watched it. And I made a similar video 3 years before, I guess, 3.5 years before I made a video like this. And that's close to 1 lakh views right now. So just tells, people how irritated they are about finding ways to do this. Okay. TDS is what? TDS is not compliance or what? Now, yeah, in topics like rent, okay, topics like rent, payment to contractors, or any professional fees, royalty and fee for technical services, these kind of points you can add up. See, you should not question check whether TDS, don't write points like you are raising questions. Okay, keep this point in mind. Check whether TDS is applicable. Don't write like that. Okay, because you are telling the examiner to check if TDS is applicable. It sounds like that. I mean, not definitely the way I am talking, but you have a completeness to the answer when you write it in a proper point manner rather than simply throwing up something like that. Okay. So if any TDS or any other taxes are applicable, PF, ESI, because when you're checking salaries, you should even check those proper deductions. But I cover all of that under this particular point. Okay, whichever laws are applicable, sometimes labor laws are applicable, sometimes income tax laws are applicable, sometimes GST is applicable. You can take GST credit for certain thing. So depending on that particular item, you have to get this. But any item they ask you to do, the framework is this. Now, so once you know this, I think you should also go ahead and without any doubt do the same thing for verification now. Okay, I want you guys to stay with me. What about verification? Let's first catch up the definition like what we did for vouching. Vouching is an act of examining vouchers to check the supporting documents and all that. How about verification? Verification is a process. What? Verification is a process to check, process to conduct an audit or check what all aspects? Existence, ownership, existence, ownership, valuation, possession and disclosure. So this time your scope of aspects are even wider. Okay, existence, ownership, valuation, possession, which means you're checking rights, obligations. So a lot of story is there. But before we discuss about verification, here you need to understand what all come under the purview of verification. What all come under the purview of verification. So verification, the broad breakup of this will be assets and liabilities. Okay, assets and liabilities. Assets here will be broken down into three: fixed assets, okay, then we talk about investments or items in the nature of investments. Why investments get a special preference, I will just tell you in a minute. And then we have current assets. Okay, fixed assets, investment and current assets. Fixed assets are again classified into tangible assets and intangible assets. Tangible assets are further classified into movable and immovable assets. Now when you know under which category of this the assets fall, life becomes way more easier. That's why this classification is very important. Fixed assets into tangible, intangible, movable, immovable. Then investments, you know whether they are long-term investments. Don't write short-term despite knowing the story. What is it called? Current investments. So long-term investments and current investments, and then current assets in the likes of accounts receivable, bills receivable, inventory. These are major current assets, right? And then I'm saying etc. They all will fall under this category. So once you know the breakup of these, then only you can do some justice to the answering part. Says the case with liabilities. Now when you talk about liabilities, the branches are what? Share capital, reserves and surplus, share capital, reserves and surplus, and liabilities. Now this story on liabilities is further classified into non-current liabilities, wherein you will go about examining all the money raised from debentures and then long-term loans, the term loans taken from banks, and then you also have current liabilities, non-current and current liabilities. So this is a clear story that one has to understand. Okay, for a minute we can look at this in this manner, and I want all of you to be clear with what we are dealing, so that you know now when we talk about assertions we should not have any confusion. Okay, so this is the definition of verification and the aspects that will be verified. Okay, good. Fixed assets, current assets, investments on this side, and we're talking about all those items, debenture holders, long term loans. Yes, very good, very good. So this, first you take a clear idea of this, and then we will now go about also discussing certain other things. Okay, done, very good. So let me now take you to the points that one has to focus while doing verification. So from the point of view of the auditor, what are to be addressed? So this is the story right now. Let's wrap this up. so that you must have covered by now all the story. Starting with basic points, we will first talk about where do we start verification. We again always start with the same 2 points: whether there was an authorization to do the transaction, a fixed asset purchase or an investment purchase, or converting something into a fixed current asset, calling something as an inventory. Did you really have the what do you say, authorization? And surrounding every purchase or sale of fixed asset or any transaction, was there an internal control? So just like how you started vouching, you will also start verification in the same manner. Just that here we have the authorizations for purchase and sale of fixed assets and whether it's approved by management, and we also have this point on whether we have proper internal controls surrounding the story. Now, when it comes to assets or liabilities, basically assets. So you can say third point exclusively applicable to assets. Obtain a breakup of that entire assets. Okay, breakup means if they say that plant and machinery is 1 crore. Acha, what constitutes to plant and machinery? So a schedule or a breakup of that will definitely be available with the fixed asset team in the fixed asset register. You obtain that, then that will be the starting point for you to confirm the existence. And mind you, this is not just the requirement here, even in company auditors report order, that is in CARO, a requirement is there for you to maintain quantitative details of the asset and including the location. So you have to check that point also. So anyway, while you do verification, it is better exclusively for the assets to obtain a schedule or a breakup. Obtain a schedule or a breakup of the category. So under that category, what all are there? Take a breakup of that so that or you can call it even a schedule, so that your life will be easy. Later you won't end up wasting time in doing things which are not required. Now the moment you get schedule, we have 3 points easily lined up. Check the title, whether that belongs to the company through the title deed or the mother document, whatever is there, check it through that. Then see if any charge is pending. Many people would have gone and put it elsewhere. So that will be a serious problem there. So check whether the charge any on that asset. So if you do these 2 points and then collect the relevant documentation, immediately once you know that there is a schedule, the entity says we don't have any schedule and all that get lost. So that is exactly where the story gets complicated. Then you will start getting your own doubts. What are these people up to? Correct? So first and foremost thing, the moment you get the schedule of the breakup, you have to check few things. Start with check the title. Check what? Title. Now checking the title will help you to understand, like for example, I can give you examples. Title deeds, like property document, or FD receipts, whatever basically that says that yes, the asset belongs to the entity. Okay, because if the title is not there, then wasting time by doing other aspects can be avoided. So primary assertion that we have to cross check is existence. To start that, you take a schedule. In the schedule, asset is there, but they are not able to prove the title. Then again, it just means that we are wasting your time. Now immediately, with the moment you ensure the title that it is yours, then I want you to confirm the value, how much it is. Check title, follow it up by check valuation. Now some people do valuation based on what the book values are. Now some people get an expert report. So I'm just writing for your understanding here. Expert reports, if any. Probably for something like inventory and all, expert reports are very much included. Check the valuation and expert reports, if any. Then we go for what is called as a special point only for fixed assets. Check depreciation. Now don't write this everywhere. For only fixed assets, that too tangible, you will write depreciation. Intangible, you will use the word amortization. Okay, so just use those two words and check that. And now comes your favorite point. Because you want to confirm the existence after checking the title, you also check the values by checking any report. Now you want to see it with your eyes. Physical verification wherever possible, not always. Physical verification wherever possible. Okay, so you do this, and then I think you answered most of the assertions. Then our common point will come here again. Do you have to comply with laws and regulations? Oh yeah, I missed one point. Wait, very important. Check for any charge. Check for any charge. Sir, how will I know whether there is any charge on the asset? It will be marked, so that you can check from the ROC whether there is any charge that has been marked. Then now come down to the same few points that we discussed towards the end there also. Compliance with laws and regulations. Now this is a very wide point. I don't know which law or regulation we have to comply for that particular asset. No, so compliance with laws and regulations. Now when I say compliance with laws and regulations, it even includes complying AS2 for inventory, AS13 for investments. So like that, whichever are applicable, then compliance with laws, regulations, and even I will add up here accounting standards, so that you guys, when you note down, will not have any confusion. Broadly, have we covered all the assertions? I think so. Even with disclosures, we have covered physical verification. Are there anything missing here? Okay, and we can add up one point: external confirmation. In the likes of standard number 501, if you remember, inventory lying at the third party, for some instances like that. Okay, external confirmations in accordance with SA 501, 505. This may not be relevant in all cases, but wherever possible you can take that. And of course, I can add up written representations. In whole lot of cases, we can take written representations. If you remember, we spoke about written representations for litigations and claims. When I did standard number 501 with you guys, I discussed litigations and claims, correct? So we can talk about that, and many more allied aspects. Related parties, existence of related parties, transactions with related parties, amount involved with it. So all of that have been taken care of. And 12, I will say miscellaneous, because I leave that point open to you. If you find anything relevant, you can definitely take that into consideration. Oh yeah, now I think you can add up your points. Yeah, beneficial ownership in case of government grants, any subsidy received. Yeah, that miscellaneous may you can add up, because they are very case specific. Don't write check if any received, check you did this. Disclosure as per accounting standard, we did no ma. Compliance with laws and regulations is that point only, no. Surendra, disclosure in accordance with accounting standard or whatever it's supposed to do. Compliance with law and regulation or accounting standard is that's only, no. Yeah. And when I say miscellaneous, you can even go and check the notes for any change in accounting policies. For any change in the accounting policies. And then just do the regular cutoff procedure and all that. Okay. Anyway, broadly, if you cover all these points, I think you will already make a decent answer. Don't try to complicate by trying to write some new points. Sir, I will write 20 points in the exam. They didn't ask you that. So make sure that you convey the point to the examiner, that you know what does it mean. Okay. And in some cases you have to, point taken, reconciliation and all that. You can use those words wherever relevant. You can follow that. Okay. So if you want to take the screenshots of those two aspects, let me quickly vanish for a second for both vouching and verification. You might want to do that, so that you guys can peacefully end this topic. Yeah, so that is for verification. If you go one step back, you can even take this one, and then you can even take this one. So background of this entire story is important, because that is something that will help you understand this whole story. Okay, all right, then if that is the case, can we wrap this up? Okay, yeah, being specific on, can you explain how what's the points that are yes, obtain cash certificate for cash balances. Yeah, relevant supporting documents is a very broad word. Okay, you can always pick up that when we say relevant supporting documents, you can always say that. Okay, can you explain how to vouch inventories of food and beverages in a hotel? Just like any other inventory, cost or NRV, whichever is lower, obtain a list of how they procure that. Now here the valuations will totally depend on how are generally used to NRV. Now whether you know to ascertain the value of that NRV, or are you involving an expert to value that. If beverages contain anything which of high value, definitely you have to even conduct the physical verification. And just like anything else, why is it so special? Just like inventories only, no? Okay, so that's the story here when it comes to all these points. Okay, done. Then so yeah, deferred tax contingent liabilities haven't been included in the story in what I discussed, because contingent liabilities, you know what to write there, because it's not even in the category of a certain liability. So yeah, may or may not situations, you can always take them into consideration. Okay, so that's our first and foremost thing on the agenda for today, with a whole lot of understanding. Then yeah, the next part that I want to pick up is the audit of banks. Now what all did we speak here is totally relevant to audit of items in financial statements, and yeah, you can special entities, right? Okay, we'll discuss special entities and then go on to those topics. Now when you talk about special entities, or audit in case of these special entities, we have a breakup here. We do talk about government audit. Okay, under government audit, we have only 5 questions if I'm not wrong. First one talks about duties of CAG, then the powers of CAG, duties of CAG, the powers of CAG, and then comes audit of expenses. Audit of expenses. Hey, this one special entity is relevant to everybody, not only new syllabus. This is relevant to everybody. Audit of expenditure, rather we say expenses, no expenditure. Okay, audit of expenditure. Now under audit of expenditure, this is a star question because it can be definitely asked. Okay, 5 points. Audit of sanctions. Audit of sanctions. 2. Audit of rules and orders. Whether every government expenditure is well within the sanction. Okay, whether every government expenditure is well within the sanction. Whether every government expenditure is confining to a rule or an order. whether government expenditure is allocated based on of provision of funds. Provision of funds. So if a certain aspect has been provided for, did they use the money for that purpose only? And then comes very important topic called as propriety audit, not proprietary, propriety audit, which talks about usefulness of spending rather than spending, whether it's a useful expenditure, and then whether all this is working properly. The 3 E's: effectiveness, efficiency, and economy audit, called as performance audit. Okay, it's a very important question. So many times they have been asked. 143 subsection 5, 6 and 7, which we already discussed the other day. Those are again the powers of CAG. Then these are also followed up by 2 more questions. Audit of receipts in government, audit of receipts, and then many government departments are there where godowns are maintained, and their audit of inventory. Again the same story, physical verification and all that. But what's been most likely to be asked in the exam is the audit of expenditure. A separate question on propriety audit, very much possible. Okay, and then here powers of CAG, that was also recently asked. So, and government audit has a bit of intro, that the CAG is appointed by the President of India, earns a salary equal to the judge of a Supreme Court. His tenure is 6 years or 65 years of age, whichever is lower. Okay, some of these points are to be covered. And when you audit these accounts or prepare the account, duty of the CAG is to compile the accounts. Now when CAG compiles the account at various levels, so you have at state level governor, at center level president, and at union territory level somebody by name administrator. You have to submit. Okay, so compile and submit accounts, which generally you see is not the duty of an auditor. Okay, but exclusively in case of government entities, there is one wing of CAG. Okay, one wing of CAG does that, and another wing of CAG does the audit. So again, there is no, self review and all stuff. So CAG's duties are mentioned very clearly, that one wing of CAG will do compile and submit accounts. Other persons will do audit of expenditure, audit of sanctions, audit of rules and orders, all of that. Okay. And in propriety audit, the point is that it should not result in wasteful expenditure. Any expenditure you spend should not accrue to your own benefit, and you should apply the same amount of vigilance that you will apply in respect of your own money. If it's my money, with what care and caution you will spend, you have to use the same care and caution, okay, while exercising even the public money. So this is the story behind government audit. Small and simple chapter, is there for both old and new syllabus. Now the second part of this special entities chapter deals with various entities. Okay, now when they talk about various entities, it starts right from educational institution, hospital, hotel, club, okay, all of that. And for various entities, what are the aspects to be covered? One, revenue. Whenever you do audit of various entities, you have 5 broad heads under which they are covered. First and foremost thing, revenue, or rather you can say this is 2. One, you can go with introduction. So in introduction, there are a few points that every audit you will start with. Basically, there are 5 points that you have to do in every audit. You have to understand what the entity is, its legal status, read the minutes of the meeting, understand the internal controls. If you are doing all this, then only you will start. So whether the entity is a sole proprietor or a partnership, what is its legal status? Okay, then once you know the legal status, read the MOA, AOA or any relevant document. Society will have a charter, trust will have a trusted deed. Like that, the guiding document you have to read. First, legal status, reading guiding document, minutes of the meeting, internal control aspects, and understanding the accounting policies that have been adopted, because the accounting policies will vary. So in every answer that they ask you very specifically about how do you do audit of a hospital, then first you have to write these 5 points. Okay, only then you will proceed with other aspects of audit. So introduction, 5 common points, followed up by revenue, then third one will be expenses. Revenue and expenses will go by based on account. What are those and how are they, bothered about? You'll go with that. Then assets and liabilities. So these are the aspects that are to be covered. And the same order, as long as you write, now let's say, talk about a hospital. Two types of patients are there. Ones who get admitted there, ones who come only for consultation. Inpatients and outpatient. So classify that revenue. Inpatient revenue and outpatient revenue. Outpatient revenue, there will be a fee receipt. One copy issued to the patient who comes, one copy kept by the hospital. How they are splitting it to various doctors. I mean, is there an agreement between the doctor and the hospital for share of revenue, or is the doctor an employee? So if he's an employee, then check salaries and other expenses, other employee benefit expenses paid to him. But if it's a contract doctor, then check the agreement between the hospital and the doctor. So if he's an inpatient, check various room rates, because general ward, special ward, ICU, ICC, so many classifications and room rates will change. Then in the bill, there should be a segregation between all these room rents. Pharmacy receipts are to be segregated separately. So when you talk about revenue for hospital, pharmacy separate, ambulance services separate, diagnostic services separate. So what are the various revenue aspects? Break them down. So is the case with expenses. And in hospitals, kind of a thing, capital expenditure will be high. Hospitals, cinema halls, okay, clubs, all these places, capital expenditure is way high. In club, if you don't have the assets, why will people come to the club? So every year clubs spend a lot on capital expenditure, and then there is a lot of repairs and maintenance that keep happening. The ones who come to club, they won't keep quiet. No, they'll end up doing some nonsense, and then there is a lot of cost of refurbishing. Movie is not good, people will tear the seats and go. And thankfully, some theaters are locked for quite some time now. But otherwise, that's what people do. Break things, throw things, litter the place. So it's a lot of regular recurring expenditure. So depending on which entity you are addressing, you got to talk about that. Then assets and liabilities are the usual 5-6 points. Whether the asset belongs to them, depreciation, those points you can always write. So this is the story for special entities, where is government audit and these. Now, couple of special entities add up in the new syllabus. This point right now what I am discussing is not applicable to the old syllabus. Cooperative societies, and a small one-page discussion on audit of LLPs under the LLP Act 2006. Right, as per a rule, we have to maintain accounts for LLP. Audit of LLPs are mandatory if partner's contribution is greater than 25 lakhs, and if the turnover is in excess of 40 lakhs, then audit is mandatory. There are two forms, Form 8 and Form 11, that have to be filed by every LLP, and there is a designated partner who has to sign these forms on behalf of the LLP. Very, very limited story. Okay, you can read. Cooperative societies, one peculiar point that I want you guys to listen from me right now is that there is one paragraph in that cooperative societies topic where it says, apart from being a chartered accountant, there is somebody else also who can audit a cooperative society. Okay, so just focus on that point, because sometimes a true or false may crop up. The auditor of a cooperative society is always a chartered accountant. No. Okay, there is also one person who has worked in the cooperative department of the state government. He is also permitted to conduct the audit of a cooperative society. And if you have time, you can dwell down deeper into this. Otherwise, the maximum exposure could be 3 to 4 marks. Okay, I mean, at least the major points you go through. There is one Multi-State Cooperative Society Act. So, and then towards the end of this cooperative society topic, powers are there for conducting inspection and all that. Again, that's totally a time critical aspect for you now. If you really want to remember so much of content and not go really wrong with it, I mean, I'll definitely feel happy if you are taking that as a serious, on a serious note and doing it. But only when it becomes a little task for you, then I think you should kind of take care by giving some importance to more frequently asked topics which are in the first two branches. So from LLP, all I know is they've asked you a question once on the whether audit is applicable to LLP. Maybe once they asked on for LLP is a small topic, 1.5 page. You can just run through all those points. How much is the capital limit for audit? How much is the turnover limit for audit? I told you, right? 25 lakhs and 40 lakhs. So if it exceeds like that, so those basic things, if you remember there around, it's good enough. Don't try to complicate much. Okay. So in the light of the circumstances, I'm telling you, don't ignore them. Okay. At the same time, you should also not worry about even if they come in the situation and you want to write them, if you follow the procedure that I told you, you will be in a very good position to handle that. Yes, within 30 days from the end of 6 months, you got to file Form 8. Form 11 has to be filed within 60 days of the completion of the financial year. So there are some points like that. Form 8 and Form 11, you guys got to just run through that. That will be more than enough. Okay. So this will sum up the discussion for vouching, verification, special entities, government audit, all these miscellaneous topics that we couldn't cover in this week for the old syllabus. Now, I would like you to go to the playlist of this channel to find a video that I will leave wherein a few standards are discussed. Okay, so you guys can go ahead and do those four standards: 240, 250 and 520, 530, which I didn't cover. I will leave that also. Okay, so what I will do is after today's session, that is after this session, I will rearrange the playlist and give the names also. Accordingly, you will have a better clarity on what to do. So 1, 2, 3, 4 sessions followed by company audit, audit report related, and today's session will take care of almost 75% of the syllabus. A few points here and there are always there that you can. So all I'm saying is, when you want to do the other round of revision, please come back to the playlist. It will be organized. Now, those of you who are from the new syllabus can stay back, and old syllabus, I will see you in the last session wherein we will come back and discuss varied and wide aspects relating to audit. Okay, more of case studies, presentation and other aspects. And by then, be ready with your doubts also. If you have any specific doubts, you can type it in the comments and I will be kind of happy to let you know about it. Okay, so that shouldn't be a problem, but only thing is, you should kind of be ready to deal with it. Don't hesitate to ask, because these are things that you will not get chance every now and then. So if you are doing it, and if you all, you are hesitant to ask something, then you can leave a text on Instagram. I've been showing you the ID there. Some people are doing it, but again, there will be a delayed response. I can't answer everybody in detail. If you're asking through this session, it will be a little more clear to you also, and I can also explain it to you in live. Okay, so I'll see you guys in the last session, old syllabus guys. Now those of you are from new syllabus, you can stay back, because I'm going to give you a little cue about audit of banks. There are few relevant topics that I would want you to do. All the topics in audit of banks are not really necessary for you to do, so I will give you a little set of topics that you want to do. And all syllabus guys, I'll see you very soon, because tomorrow also I won't be able to meet you. That is because we are doing EIS, and then we will catch up for the last audit session, wherein we are going to discuss a few more aspects, and I can discuss all your doubts, plus I'll tell you what to do for the exam. Okay, Alright then, yeah, those of you who are thanking me, like I said, good. Thank you, welcome. Now, so very good. Let's wrap up this session with that. All the banks, first of all, I want you to be very clear with one very important question in audit of banks. Yes, old syllabus guy, thank you so much for being part all through. And thanks for leaving those thank yous in the comment. Yeah, Arasu, Pendra, yeah, everybody. Okay, now let me quickly tell you something about the bank audit stuff here. There is one thing that I would definitely want you to remember is a small table. So those of you who are willing to note down can note down this point because it's kind of very important. Who appoints the auditor in banks? Okay, this is a very important point because recently also a 2 marks question was there from that. Who appoints the auditor? Appointment of auditor in case of banks. Which bank is it? What will they do? Yeah, welcome guys, all of those who are sending a lot of thank yous. Yeah, guys can exit, no problem. New syllabus guys, come on. Appointment of an auditor, audit of banks. This is very important. As latest as the last time also, they asked in true or false. Appointment of auditor. This is one topic that I would definitely want you to not miss. That this point depends totally on which bank it is. Okay. Normally, if you talk about any banking company, okay, let me make a small chart here. Banking company, they are appointed by members in the AGM. Okay, banking company, it will be appointed by members in AGM. Second one is if it's a nationalized bank. If it's a nationalized bank, the auditor of a nationalized bank will be appointed by the board of directors. Who will appoint it? The board of directors will appoint. Board of directors. Now, one thing that you have to understand is whether it's members in the AGM for a banking company or board of directors for a nationalized bank, these both have to be approved by RBI. Approved by whom? Approved by the RBI. Now, if RBI is not approving this appointment, then doesn't make sense. Okay. Approval of RBI, prior approval of RBI. Let me add that word also there. Prior approval of RBI should be taken. Then let's talk about few more banks here in the likes of regional rural banks, RRBs. Okay. We also have the State Bank of India and its branches. Okay, so let's talk about the next one here. One is banking company, 2 nationalized bank, 3 SBI. The auditor of SBI is appointed by CAG and in consultation with central government. Okay, we'll give headings. Bank appointed by consultation or approval. Approval or consultation. Okay, prior approval RBI, here central government. Then we have this one, subsidiaries of SBI. Subsidiaries of SBI is SBI only will appoint. Okay, subsidiaries of SBI will appoint, and there is nothing to further break in here. And RRBs, the regional rural banks, for them again they are appointed by the board only, but whenever they are appointed by the board of the bank or bank concerned, you have to take approval from central government. So RRBs are appointed by the bank concerned through their board, and with again approval from central government. Yeah, so I want all of you to make sure that you know this table, because this one is going to get you sometimes a true or false with 2 marks. So that makes our life more easy. So it's the first and foremost topic that I would definitely want you to understand. Then there is one short answer question that I would. So this is the first topic. Second one, risk management in banks. That's a question that has come in the exam for risk management. Right? There are 5 points in that answer. Okay, as to what will be the risk management that generally happens in banks. So that's not such a simple point. 5-point answer: understanding the risk management process. So please make sure that you read this question, understanding the risk management process, because this is very important question. It has already come in the exam. It can again come. Point number 1, oversight by TCWG. Normally we say oversight by TCWG, but here it is about the oversight from the TCWG of the bank. Okay, right? And then of course, where are those risks coming from? You remember these points that we discussed even in 315, control activities, implementation. Even in EAS we discussed the framework of internal control. So same way. So first oversight, then we have where these risks are coming from. You have to do risk assessment. So risk identification and its assessment, how they will impact, what is it, risk identification or measure assessment. So first of all, somebody should take the responsibility. There should be an oversight by TCWG, risk identification, assessment, control activities that are to be taken. What controls are to be implemented? Then monitoring of, after you establish controls, whether they are relevant or not, you have to monitor. And fifth point is about having a reliable information system. I think I'm right in all these, because that's what I remember. Okay, so these are the 5 points that you have to take into consideration while you discuss this concept. Okay, you can now see it fully and clearly. But very simple. Oversight by the TCWG, risk identification and risk assessment, control activities, monitoring, and following a reliable information system. So this will give you an idea about how to deal with the risk management process. Clear? Then moving on, we will be going to the next question, which I believe is relevant. Will be understanding the various kinds of report. Now there is one point that all of you have to know is what is called as a long form audit report. Okay, long form audit report, which has to be submitted by 30th June every year. Long form audit report, also called the LFAR. What is the timeline? 30th June. Okay, if the year is complete, then you have to give the LFAR within the 30th June part. So I hope you guys are clear about this long form audit report, and rest of the points you can give it a reading. Nothing much will be difficult there. The long form audit report is specified by RBI. So as an auditor, you have to address all those points that are given in the LFAR and then submit it before 30th June of every year. Okay, then the next topic that is important generally will be something that you learn in advanced accounting, advances. Okay, and when you talk about advances, what are the various advances? That is term loan, demand loan, working capital loan, cash credit, overdraft, bills purchased and discounted. All those will form part of advances. Then classification of NPAs. I'm not revising this topic because you know what is a standard asset, standard, substandard, doubtful, and even the provisions. I hope you know this because you have done problems in advanced accounting. Please go through the chart of that along with the rates. They won't ask you any specific calculation here. If it comes in advanced accounting, well and good, it does not disturb you. But it comes elsewhere, then you probably have to be slightly bothered about how to check, because as per prudential norms. Then along with advances, what I also want you to read and recollect is income classification or income recognition norms. Normally when we talk about income recognition in banks, it goes by accrual. But income recognition in case of NPAs are only on receipt basis. Okay, so this is a very critical point, and various factors that you have to consider for income recognition is again based on the prudential norms of RBI. And when we talk about prudential norms of RBI, certain advances that spark in my mind are: one, agricultural advances. Okay, agricultural advances wherein you have short duration crops and long duration. Short duration crops, if it's outstanding for 2 crop seasons, then it will become an NPA. Okay, 2 crop seasons. Long duration crops, 1 crop season, if they're outstanding, that is what will become you know so are you clear about these points? Then we have in case of NPA recognition, we have KVPs and IVPs, Kisan Vikas Patra and Indra Vikas Patra, or any central government guaranteed, okay, or central government guaranteed, to the extent coverable or to the extent available, you can treat them as good, because they are anyway backed up by central government or Kisan Vikas Patra or Indra Vikas Patra. But let's say for example, the KVPs are worth 5 lakhs. The outstanding loan, that is principal plus interest, is coming to only 3.5 lakhs. You can consider that fully and recognize the income, because the underlying asset, the KVP, anyway is there. But if the loan taken was like 4 lakhs, value of KVP 5 lakhs, but with all that unpaid interest and all, now outstanding is 5 lakh 20,000. To the extent of 5 lakhs, you will recognize it because it's okay, it's government guaranteed, or through KVP or IVP, you will get it. That extra 20,000, you will only record it on receipt basis, that is on cash basis. I hope all of you know this point. Now these sort of small points become very, very important. Okay, so yeah, that's it. That's the idea behind discussing these points. Then restructuring of loans. Wherever there are any restructuring, NPA classification will also start from such restructured date. Okay, that is also an important point that you take into consideration for this one. Now, one more very, very important question that has always been coming in the exam is the mode of creation of security. Okay, I'll just let you know that this is a question that has come in the exam already twice. Mode of creation of security. So first thing that I would like to discuss when we talk about security is what are those two: primary security, that is a borrower, and then there is a collateral security, right? So what are the various modes of creating a security? Modes of creation means what? The first one is about mortgage. Remember, hypothecation, mortgage, pledge, names are there. So those only. So mode of creation, first one is called mortgage. Okay. Second one will be pledge. Now generally mortgage is for immovable property like house and all that. Pledge is for shares, and in pledge the possession of the asset is with the bank. Gold, okay, or you can say pledge is for shares, a gold, okay. Mortgage generally immovable property. Then the next one is called hypothecation. Now hypothecation is normally for stock or vehicles, wherein the possession is with the user of the asset or the owner of the asset, but the title is with the bank. So if you don't pay installments of the vehicle, vehicle is still with you, but title is with the bank only. So if you don't pay, they'll come and take your vehicle and go. Same is the case with stock. Stock is hypothecated. You can sell the stock, but when you are unable to pay the loan, just by doing that, bank has a right over that. Okay, so mortgage, pledge, hypothecation, then assignment. Assignment is for insurance policies. So if I am the beneficiary for that insurance policy, okay, and I have taken a loan, and something may probably happen if I don't pay my outstanding dues, then whatever insurance policy is on me, that will be assigned to the bank. Now let's say I have to pay the bank 25 lakhs. My insurance policy is worth 1 crore, and or so and so person's insurance party is 1 crore. If the deceased person has an outstanding loan of 25 lakhs, so 25 lakhs bank will take, and balance 75 lakhs will be given to whoever is the beneficiary, their family or whoever. Sir, how can they do this? That is what is called assignment. Whatever I have to get is assigned to the bank because I owe them. And then we have one more method of creating security called set off. One positive balance and one negative balance in the same bank. One positive balance and one negative balance in the same bank. It can be set off between them. And then the sixth one, lawful possession of somebody else's property, called as lien. What is it? Lawful possession of somebody else's property. As far as I know, if you cover these aspects in audit of banks, it should be enough. Check all the prudential norms for income classification, asset recognition, and then cover these points. So whenever you are doing bank audit, please come back here and then just do that. Give it a reading. Audit of P&L items, audit of other item. Don't waste your time on all that. Okay. First you cover whatever I discussed here. So maybe what you should do is, whenever you are doing the revision of audit of banks, come to this video, watch the last 15-20 minutes wherever audit of banks is being discussed. First to cover off these topics as a glance. Then go back to your material, see whatever you want, and then address those issues. I think that will help you finish. If I didn't cover a point or two, I think you should just put a little effort in trying to do whatever I believe as important in audit of banks. I have covered them. Maybe you can check, like I said, agricultural advances, advances which are backed up by KVP, IVP, advances under consortium. If multiple banks have given loans, to people like Vijay Mallya, and then they turned out to NPA, right? The story of lead bank. Just please remember about this one. Consortium, loans under consortium. Okay, I think somebody was mentioning that sometime back. It skipped my mind. So now I am telling you that again. Loans under consortium. That will be something that you have to take into consideration. Lead bank will be there. So lead bank story, it will, if lead bank collects it and does not give the other bank will treat it as NPA. So such points also you have to take into consideration. And loans that are affected by natural calamities, where there is a restructuring in that loan, the NPA classification will again start from the restructured date. So such points are there that you have to take into consideration. But for that, I think that's all. Major aspects, whatever are there, I think we have already covered. Okay. So please do take a little extra care while you do these things. And there is one more session wherein we'll cover whatever is left over. If there is anything miscellaneous, we'll catch up in that session, and we can. Yeah, very good, Durga Prasad, for all those points that you've been putting up. Yes, and the classification of NPA is always borrower wise, okay, and not facility wise. Very good point. So if one facility becomes NPA, then as a borrower wise you have to classify it. So this is NPA, that's not NPA, no. So it will be borrower wise. Once a borrower is classified like that, then all of them are classified as NPA, right? Major points, like I said, I tried to address. So if there are any points, ifs and buts, you want to take care of them, please do take care of them, and give a revision thoroughly to vouching verification, that is chapter 9, 12 and 13. So as of now, we will wrap this. Don't worry, we have one more session. So audit in automated environment, I'll give you cues there, and what to do. There also 4 or 5 questions only are there. So we'll do it. We'll do everything in the next session, and towards the end, like this, we'll send the old syllabus people home, and we will for 5-10 minutes discuss on that. It's a very small chapter. You can try and do it, and if there are any doubts, you can bring it to me. Yeah, wherever is required a conceptual summary. Okay, I'll try and do that. Don't worry. Clear? So please do audit of banks in this manner, and also do take care of chapters 9 and 13. So 9, then 10 and 11 already covered. Audit reports in company audit. 12, 13 to the extent possible have already covered, and lots of chapters in the beginning have already been covered. So please run through all of this. Whatever best I could put off in this time, I did from my side. Now the ball is in your court. Please do make sure that you give thorough level of attention to it and do the best. I will catch up with you tomorrow. I hope all of you watching a new syllabus, people. So I'll catch up with you tomorrow for the 4th chapter of EIS. And please do revise the stuff if it's possible during the day. I think I want you to revise a little bit of that, because I want to skip some basic aspects like e-commerce, digital payments and all that. I'll be doing an overview only. Frankly speaking, some of the topics don't really need my attention in this thing, but there are a few newly added aspects that I would like to really discuss from chapters 4 point of view. Okay, so yes, chapter 4, I will catch up with you guys tomorrow. Thank you, good night.